How are we getting on, guys? Luke here from LAGFX. I'm back today with a top trades of the week video. If you are not familiar with these types of videos, it's basically when me or James provide our clients with some good quality trades. And then when we do so, we like to basically show off what we've done, the profits we've managed to capitalize on, and the actual trade itself, giving you a good rundown on the analysis. And then, the steps we took in order to maximize those profits and minimize any potential risk. So jumping straight into things, obviously we can see here on screen, we have the euro to the Japanese yen pair. This was a trade that we actually managed to capitalize on Monday of this week, so the 11th. With this trade, we were looking to go short anyway. If you watched our previous Sunday sessions video and the one before that, I actually told everyone that I was looking to basically looking for the Japanese yen to appreciate. So in this case, we would see the market go down because the Japanese yen is actually the quote currency rather than the base currency. So we can expect price to go down as the Japanese yen appreciates. Now, what was my reasoning for this? Well, we've seen the Japanese yen depreciate quite significantly for quite a while now. And I think it gets to the point where things are either overbought or oversold, and there has to be some kind of retracement. There has to be some kind of correction within the markets. And I think it was due that. Again, to add to my evidence, as we can see just above here, I have a line. This marks the last high. Since that last high was created, we have then seen lower highs being put into the market. This suggests that price is struggling to break that highest point in the market, again, which tells me that there's more supply being put into the market than there is demand, and in turn we can expect price to move lower down. Now, with this trade, it was quite simply just waiting for breaks of structure, which we actually saw here. I'm going to dive into it in just a moment, but also looking for displacement within the market as well. So we can see how price was moving bullish. We wanted to basically look for some kind of break of structure, some kind of evidence that price is now looking to move bearish beneath this point here. If price had broken above this line, so the last highest high, then we can expect price to continue moving bullish as it's still creating those higher highs and higher lows, which is typically your bullish structure. Because it's failed to do that, that was our first piece of confluence. Price is looking to move lower. So looking at our analysis and how we entered in on the position and why we did, well, as we could see, we had a clear bullish rally producing that higher highs and higher lows. So that bullish structure, it then came up into this area. We had a high set. Price then came down to set a higher low. Perfect. Price came up to set a higher high. So we would expect when price comes back down, it's going to set a higher low. Price would go up to set a higher high, and that would continue. As we can see, that wasn't the case. Price actually set this higher high here, came down to break this previous low. So this is a clear break in structure. As in bullish structure, the highs get broken, the lows don't. So the fact that we broke that low tells us that price may be looking to move bearish. So with that piece of knowledge, we were then looking for some kind of retracement in order to jump in on the market. Now, once we had that break of structure, price came down to set a new lower low. Again, this gives us more confluence and builds our bias to sell into the market. That price is, potentially looking to move lower. Price came up, actually retested this neckline, produced us with a break of structure again on the fractal structure, which I'll go down to in just a moment. And that is where we entered. So I placed two positions on the Euro JPY, and I'll put all of my positions on screen throughout the video, and also show you, the updates that we put out to our clients. But I placed the position as soon as price tapped back into this neckline and showed signs of rejection. I entered straight in, but then I also placed a second position when we had a break of structure from this retest. So when this retest broke its bullish structure, as obviously the retest is bullish, as soon as that broke, I was in on the market. I actually set a pending order and waited for it to be activated. Now this as a whole is telling us a lot. For one, we have clear bullish structure, a distribution, and then price moving bearish. We have a breaks of bullish structure. We've broken the higher low. We also have a lower high set, and we also have a lower low set. So there's three pieces of confluence there. On top of this, we were looking at the overall structure of the market. The overall structure of the market is bearish, so we want to be sellers into the market. Again, that builds our bias. On top of that, this high that it created on the higher time frame structure came lower than the previous highs that it set. So again, that builds our bias. So with all of that being said, I just jumped in on the market, and as we can see, price played out beautifully. We did manage to catch a lovely swing of up to 110 pips. I took partials in and around this whole position. So now looking at this pair on the 1 minute time frame, we can see that structure and how it's been broken. Price is retested on the higher time frame structure, failed to break above, it's rejected that neckline, and then price has gone on to move bearish. Now we can see how I've highlighted a second BOS here. If we zoom in slightly, I entered somewhere around here, I think, and then as soon as price came down, actually broke and displaced these lows that had been set in the market. That was confirmation that price is going to take another bearish turn after taking this bullish retracement. So we had a pending order set just below, and as you can see, that got activated and price played out just as we wanted to. Now, this whole swing was done over the course of a day. So we placed it around 2 o'clock on the 11th, and we closed around 7 o'clock the next day. So, a full day and 5 hours. Now, obviously, with us placing two positions, we managed to get a refined entry, obviously further on, giving us a lovely risk to reward ratio of a 1:6, which was great. We had a stop loss of 16 pips, a take profit of 111. That gave us a 6.8 RR. So we managed to capitalize over 12% on that position. With our first position, we had a larger stop loss as we set it above this structural high. This was protecting our stop loss, and we had a 1:3 risk to reward ratio with this trade. We had a 38.5 stop loss with 121 take profit, and we made around 6% on that position. So from both positions, we made 12% on one of them, 6% on the other, and that's if we didn't take partials throughout the trades. So we could have actually made a total of 18% from this whole swing by placing these two positions, but because we took partials throughout, our returns are obviously a little bit less. Now, I know the explanation was quite brief, the reason for our entry was quite brief, but sometimes that's all it needs. We just look at the structure of the market, we follow structural laws, we look for breaks of structure, and we get on those reversals. Now, with all that being said, I think it's extremely important to watch our Sunday sessions videos just because they're very informative and they give you full rundowns on what we believe is going to happen in certain markets throughout the week. So if you are looking to capitalize in the Forex markets, but you're not quite sure on the direction of the market or which markets to be involved in, those Sunday session videos will bring you a lot of value. And we'll give you some good tips. I know this video has been quite brief, but I hope you've enjoyed it. I hope you've enjoyed seeing how we've profited. I have thrown up some screenshots throughout this video of our entries and things like that, the partials that we have taken, and then obviously our results. If you aren't involved in our Learning Lounge group chat, I couldn't recommend it enough. It's completely free to join. All you need to do is follow the link in the description, and that will take you straight through to the Telegram group chat. In there, we post all of our insights, any educational content that we've created for you guys, and then updates on the actual business itself. If you have enjoyed the video, go ahead and leave it a like. All the support that you guys provide is very much appreciated. If you have any questions or you're unsure about anything I've gone through in this video, please leave them in the comments below and me or James will get back to you as soon as possible. Again, thanks for watching and we'll see you guys in the next Top Trades of the Week video.